Hey everyone, welcome back to Corporate Decoded, the place where we decode the language of big business and well. Today we're diving into Suburban Propane Partners, LP's paperwork to see what is cooking behind the scenes. Might be more than just propane in this report, so buckle up because we are going to unpack a recent announcement from Suburban Propane Partners LP that rev. Some significant moves they are making with their debt and their finances. It's a bit of a juggling act and we are here to break it all down for you. Plus, if you want to connect with other corporate sleuths, our Discord channel linked in the description is the place to be. Alright, so what we have here is a Form 8K, which is basically a company's way of telling the public about a big event that isn't part of their regular financial reporting. You can think of it like a special bulletin. Now, the big news for Suburban Propane Partners LP as of the 8th of December 2025 is all about their money, specifically how they are borrowing it and how they plan to pay back some of what they already owe. So what does this jargon mean? Essentially, the company is selling new debt. It's like taking out a new loan. But in this case, it's $350 million worth of what they call senior notes, which are basically IS that they promise to pay back with interest. The interest rate on this new loan is 6.50%, and they plan to pay it all back by 2035. Now, this isn't just a casual loan, it's a private offering, meaning they are sell. Link it to big investors like large investment funds and some foreign investors, not to everyone on the street. This means the deal is pretty much done, but there are still a few final details to sort out before the money officially changes hands. Think of it like having an offer accepted on a house that is going to close soon, but there are still some papers to sign. Now, here is where it gets really interesting. They are not just taking out new debt. They are also planning to pay off some old debt. They are redeeming all of their 5.875% senior notes that were due in 2027. This sounds like they are saying, hey, we have some money coming in. We are going to use some of it to pay off this older loan ahead of schedule. It's like deciding to pay off your credit card with a higher interest rate using a balance transfer to a card with a lower rate. This bit is just standard legal language. They are saying this announcement isn't actually the official action of buying back those old notes. It is just them informing everyone that they intend to do so under certain conditions. This is another legal detail important for those big investors. They're saying these new notes won't be officially registered with the government for public sale, meaning they are only being sold to certain qualified investors who understand the risks involved. For context, Suburban Propane Partners LP trades on the New York Stock Exchange under the ticker symbol SPAKE. Now, this move to refinance some of their debt is pretty common for companies, especially when interest rates are looking favorable or when they want to clean up their financial structure. So let's look at what this all means. This is like a financial house cleaning they are taking on new day. BT that matures later in 2035, likely to give them more breathing room and potentially at a different interest rate than their older debt, and they are paying off their 2027 notes, which means they are reducing their immediate debt obligations while the new notes have a slightly higher interest rate of 6.500% compared to the 5.875%. On the notes being redeemed, this is often part of a larger strategy. Perhaps they are extending their debt maturity profile, or they believe the cost of this new debt is acceptable. Given prevailing market conditions, think about it from a business perspective. When a company issues new debt and uses it to pay off old debt, it can signal a few things. Firstly, it might mean they are confident about their future earnings potential and can afford to take on new obli. Secondly, they might be trying to get better terms on their borrowing, perhaps a longer repayment period or a fixed rate that protects them if interest rates go up in the future. In this case, they are paying off debt that was due in just a few years with debt that lasts much longer. This suggests they are planning for the long haul. Now, this announcement doesn't give us detailed financials like revenue or profit directly, but it tells us about their capital structure, how they are financing their operations and their future plans. They are actively managing their debt, which is a key part of any company's financial health. It shows they are not just letting their debt sit, but are making strategic decisions about how and when to pay them back. One thing to consider is the timing. While we don't have the full finance. Our picture from this specific filing, the fact that they are issuing new notes and redeeming old ones around December 2025, could be influenced by economic forecasts or the company's internal projections for the coming years. Are they expecting higher revenues that will help them manage this new debt? Or are they anticipating a period where borrowing might become more expensive, so they are locking in rates now? Looking at the broader picture, Suburban Propane Partners LP is in the energy sector, specifically propane distribution. This is an industry that can be sensitive to economic cycles and energy prices. Their ability to manage debt effectively directly impacts their flexibility to invest in their business, respond to market changes, and ultimately provide value to their share holders. So what is the verdict here, Suburban Propane Partners? LP is clearly making a move to optimize its debt situation by issuing new longs. term notes and retiring some of their existing debt. This demonstrates proactive financial management. They are extending their debt maturity, pushing payments further into the future, and potentially securing their financing for the next decade. Also, the slightly higher interest on the new debt is something to watch, but it is likely a calculated move for extended financial flexibility. Overall, this filing shows a company actively shaping its financial future by managing its borrowing costs and repayment schedules. It signals a degree of confidence in their ability to sustain operations and meet their financial obligations over the long term. It is a positive sign of strategic financial planning. Alright, that is our breakdown of Suburban Propane Partners LP's latest filing. What is your take on these numbers and what they signal for the company's future drop? Your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.